You're listening to the Today's Conveyancer podcast, the leading source of information for residential property lawyers in England and Wales. Don't forget to subscribe and sign up to our free newsletter at todaysconveyancer.co.uk. You can also follow us on LinkedIn and Twitter.
Hello and welcome along to the very first Today's Conveyancer podcast of 2025. Today we are talking about the Property Trends Report published by environmental search and data group Landmark. It is a regular feature of the podcast, and I'm pleased to welcome back our regular contributors Ben Robinson and Rob Gurney. Ben, Managing Director of Landmark Estate Agency Services, and Rob, Managing Director of Ocrasoft. And the report, as a reminder for listeners, is a snapshot of what's happening in and around the property market from listing through to completion. We've got some interesting stats as ever to talk through on the podcast. Thank you both for joining.
Thanks, David. Good to be here.
Well, let's start at the beginning of the transaction. Listing numbers presents an interesting picture for us this year. Ben, I wonder if you could just start going through where demand looks like it might be as we run into 2025. We're talking on the day we've had the inflation numbers out, 2.5%, a slight reduction on the back end of last year, which means it's moving in the right direction. And at a point in time when there seems to be, and we'll say it quietly, some positivity around the market. It's a self-fulfilling prophecy, the property market, isn't it? If we say it's going to be good, it might be good.
Yeah, certainly nice if that were kind of true, but I think, yeah, it does. The market works a lot on confidence, and we do, or I do from an agency's perspective, hear quite a lot of confidence. And probably understandably, if you look at the numbers for last year, supply, so properties coming to the market, were up. In fact, it was 6% across the year. In Q4, it was 8% against 2019 levels. We obviously hark back to 2019 as sort of the last normal year before we had the COVID waves pre and post. And after COVID, we went into a market where you had 10 buyers to every property. So it's very much a seller's market. And we flipped on its head now. Supply is good. We were at record stock levels, I think, since something like 2010. And what that means is there's lots of choice. And that actually is the start of demand. People wanting to sell is the demand to move. But what we're not seeing necessarily is that flow through into sales or certainly completions as well as it used to or has been in the past. And there could be lots of reasons for that. We know finance is expensive. You mentioned inflation before. Underlying swap rates have been creeping up. And that makes a difference when you've got lots of choice as a buyer. Are you fussier? Probably, because you can move somewhere else if you've had a bad survey and they don't renegotiate. Our price is corrected enough in the last year to get that stampede of willing movers to commit. But certainly supply and upfront is looking positive going into this year. There's lots there for people to buy.
We're entering into a relatively artificial period of time, Rob, aren't we, with the stamp duty changes coming at the end of March. And you were saying that you've actually seen some of that already manifest at the back end of 2024 through the sold subject contract and the searches ordered stats that you have, and then ultimately the completion stats as well.
Yeah, let me take you through what we've sort of seen in the previous quarter, which kind of gives a good sort of indication as to, well, I suppose then to talk about what to expect in terms of the chaos as we run up to the end of March. I think the headline from a conveyancing perspective in the last quarter, in the run up to Christmas, was one of stability, particularly when you're comparing against 2019, which, as Ben says, is the last sort of, in inverted commas, normal year that we compare against. The first thing to say, of course, is that we are running severely under the 2019 levels in terms of conveyancing cases, as well as obviously ultimately completions. That stability is kind of manifested itself in that the level versus 2019 has been very stable, certainly throughout the last 3-month period. Effectively, what we're seeing is that there's about 2/3 the number of transactions being processed versus the same quarter from 2019. I suppose the further we go away from that year, that normal year in inverted commas, the less it resonates. It's quite difficult to sort of think back to where you were sort of 5-6 years ago and compare your performance now versus then. And obviously lots have changed in the market in that 6-year period anyway. But that's basically where we are, in reality. But going back to your point in terms of what we're sort of seeing in terms of, there's definitely a calm before the impending storm that we all know is coming at the end of the next quarter. But certainly from a December perspective in particular, there was definitely a ramp up in terms of completion numbers. Now that ordinarily happens anyway, because we compare the completion to instruction ratio on a monthly basis. Traditionally, December sees a drop off in new instructions, and of course, we do see the craziness of everyone that wants to move in before Christmas, and we all know that conveyancers do at least a month's worth of work in the 3 weeks that are available to them in that month, which I think sometimes goes unnoticed and unstated, and it's actually a bit of a miracle that level of work gets done in that period of time. It's a bit crazy, but the completion to instruction ratio in December was 105%. So, i.e., there were more completions than new instructions across England and Wales, basically, in that month. That didn't happen in 23, if I remember rightly. It was below the 100%, but 105 for December. And like I say, normally as we enter into a new year, there's been that rush. There's been that sort of completion frenzy pre-Christmas, and so conveyancers ordinarily have a little bit of respite, don't they, going into the new year when their portfolios start rebuilding for the year ahead. No such luck in 25, I'm afraid. We've already seen a ramp up in completion numbers, and quite rightly so. For those that are expecting to be completing by the end of March, you would obviously expect action to be taken in the months preceding, and that's exactly what we're seeing. I feel very sorry for my ex-conveyancing colleagues, because the next 3 months are not going to be much fun for them, and obviously it's going to build up to a huge crescendo at the end of March.
What indications are there that the market is going to stabilise after the end of March? There's a huge amount of stock out there. The Bank of England may or may not reduce interest rates, and as I say, it's a point in time when inflation remains above their stated objective. That feels as though it might get pushed back. So where do we think the market might move over the course of the next 12 months?
From a conveyancing perspective, of course, we think that there is capacity in the market because of the current levels of transaction numbers. It all comes down to the cost of money, doesn't it? As soon as it becomes cheaper to borrow, I feel as though there's the potential of almost a tidal wave of pent up demand that we could see turning into rather larger transaction volumes, and obviously the accompanying completions that go along with that.
With everything Rob said from that perspective, I think, Rob, you mentioned before the stability of last year, and that stability was at current interest rate in terms of what the market's offering. So the only thing that can change affordability if prices come down and correct further, or the cost of money comes down. So if neither happens, inflation lasts for longer, but you've got to remember economic growth needs action as well, and that'd be a consideration. Interest rates coming down help growth, and we simply didn't grow in the back half of this year, and that's the number one goal of the new government. So that might change it, but if the cost of money comes down, I think that stability will happen at a higher level. There'll be a jump, and then it'll come in at a higher level. If the price is correct enough, it will have a similar effect, although I think psychologically the cost of money is slightly more important, actually. If both happen, then we could get the stampede, but it will then find a new level of stability at higher than where it has been in the last year. The challenge is, as Rob mentioned before, with that far out of 2019, last year feels like normal. And, we talked prior to going live that we had the 2006 and before normal, and then, it probably got to 2010-11 before people realized that wasn't the normal anymore. We couldn't hark back to that. So, it'll be interesting to see where that normal levels off at. But I think it really does depend on that psychological interest rate and, of course, house prices allowing the people that clearly want to move to get on with it and get through, and perhaps bring a bit of balance as well. Because when you go back to balance, so it's not all the powers with the purchaser or all the powers with the seller, you've got a bit more realistic chance of getting those awkward transactions through because the buyer doesn't think they've got loads of options. They perhaps just have a few, and the seller has to be reasonable because they haven't got a never-ending line of buyers at the door.
I know that speed is not the be-all and end-all, and I'm a big believer that certainty is a much more important element of the home moving process. But Rob, Ocrasoft is a case management system. You have a workflow, and you've got some insight into the length of time that transactions are taking. That's still a huge criticism that's leveled at the sector. Is there any indication that we can bring those times down in 2025?
It's a massive issue for the profession. Of course, balancing, capacity has always been a tricky thing for conveyancers to do, and you have to factor in how long, on average, does a transaction take. And the good news is, we're still sort of analysing 2024's data compared to, all of the previous years that we've collated over the years. You can see that in certain parts of the conveyancing transaction, there doesn't appear to be an increase in 2024 versus previous years, which obviously is a positive sign. But I suspect that is a capacity, an improved capacity situation versus any sort of changes in the way that conveyancing is processed. And if you look sort of over the last, let's say, 10-15 years, absolutely, it's night and day, weeks longer than it used to be. And that's the biggest, I suppose, issue facing the profession, in terms of technology has improved. Technology has become more freely available. Customer expectations is that things happen a lot quicker because of technological improvements, but yet actually the conveyancing process does take longer than it ever used to. So it's a conundrum that us and I know a number of others are working hard to unravel. But yes, the statistically speaking, it's still taking on average around about 4 months from an instruction to a completion on average. I know a lot of conveyancers don't like the talk of 4 months, and of course many transactions go through a lot quicker, but it's important to understand we're talking about the average timescale.
And Ben, if I can just touch on material information and that whole upfront debate that continues to rage. Again, is there any evidence that 2025 could be a year in which that front-loaded hip light, and we use that phrase very carefully, could really change the way that we transact property from an agent's point of view?
I think there is. There's quite a lot of evidence coming up last year from agents that we work with. There's a change in mindset. There's two sides to that. One is the ability to charge the home mover at the start for some of the transaction. That's becoming more of the norm rather than the fear that I'm going to lose out because I charge at the start, covering things like AML, EPCs. Now that actually opens up the ability to do more because there's a cost to that. There needs to be commercial models that allow that to happen. But where people are doing that, they're then bringing forward the solicitor, which is really important, as well as the information. So material information is one thing, but if you just collect it all, put it on the website, you don't really understand it, neither does a home mover, and you don't have any legal link to what's been done, it does need to be collected again by a legal professional. It needs to be analysed by the legal professional and understood and explained to the home mover, which is where we get a lot of problem because that happens too late in the day. But we are seeing agents, sort of leaders in the industry, take that forward, and they're seeing massive differences in the numbers on the certainty side. And if you're going from 60% certainty, which in these cases a lot of these agents are, to 80% plus, what does that look? And this is why I ask agents, what does that look like in your business? Because that's adding something along the lines of a third of the revenue you've currently got back on straight to your bottom line, as well as cash flow up front if you charge up front, because you don't have to, of course, different commercial models. So one thing, financially, in a difficult market, for the same amount of work that you're doing now, you don't need to take any market share, you're going to make a lot more money. And I think not enough agents look at that tangibly, look at actually what is the impact of certainty on the business. They look at what's in the diary tomorrow and how do I take more market share. And we all know that that's hard work. And then if you look at a close market, even closer market in auctions, but Scotland, where they kept their property report, it does go through in 6 to 8 weeks. You do exchange contracts within the first 2 weeks. There is complete certainty of the process. It's not perfect, but even auctions over here, they complete within 28 days. And that's because A lawyer's been involved at the start, the documentation is in place. So material information is actually a good stick to start to encourage behaviours. But I think we've got to help the market to see the positive impact about embracing that, not just as a regulatory requirement, but as a business model shift. And if we do that, it makes a big difference. Some agents leading the way last year, more and more agents then learning from that and saying, we've seen you do it, we can do it. As it's not legislative, and I don't think we'll get that, I don't think we need that, it won't happen this year in one fell swoop. But over 5 years, that could make a massive difference. And so I'm excited to see the progress this year. And of course, technology will help that. But I think, what I always say is you've got to get the process right first, or else you're just digitizing a broken process. If you can get the process right, then the right technology can help that process be more effective. So that's what I'd say from an agent's view. And it's an exciting year of progress, with material information being a stick that's encouraging agents to look at this in a different way.
One of the fascinating things from my perspective, looking at time taken in terms of conveyancing processes, is actually the commonality between the time that it takes on a sale versus a purchase. And that's because traditionally, and at the moment, the norm remains that the seller's lawyer gets instructed at the point that the offer's accepted and the conveyancing transaction begins. What I would be looking for is actually a widening of those sale and purchase timescales, because if the seller's lawyer gets instructed early on in the process, as Ben suggests, doing work prior to a buyer being found, then actually, the expectation is that, sure, the timescale of the seller's lawyer being instructed to the property being sold increases. But actually, that's not when conveyancing starts, because the conveyancing starts when a buyer's found and the legal process begins. Now, that timescale has the opportunity to be shortened dramatically if a comprehensive piece of work has been done on the property ahead of a buyer's lawyer even been instructed. So I would suggest that we almost need to kind of look at transaction times very differently on a sale side to a purchase side. At the moment, they're too closely matched together, and it's creating inefficiencies.
I'm certainly excited to see what 2025 holds. And the next time that we're together, we will be discussing Q1 of 2025, which, as we said, is going to be artificially influenced by this stamp duty change. But we may have got a better idea of what the rest of the year holds. As ever, great to have you both on the podcast. Thank you both for your insight. Thank you, Rob.
Yeah, thanks, David. And just a quick sort of shout out to all the conveyancers out there. I know the next 3 months is going to be a bit of a rocky ride. So good luck to everyone in processing all of those completions in the mad stampede up until the 1st of April.
Thanks, Ben.
Cheers, David.
The Today's Conveyancer podcast is available on your preferred podcast provider. It's also available on todaysconveyancer.co.uk. My thanks as ever to Rob and to Ben. Thank you for listening, and we'll see you again soon.
You're listening to the Today's Conveyancer podcast, the leading source of information for residential property lawyers in England and Wales. Don't forget to subscribe and sign up to our free newsletter at todaysconveyancer.co.uk. You can also follow us on LinkedIn and Twitter.